Hey there! Every month I ask my patrons on Patreon and channel members right here on YouTube to ask me their burning questions about tech, stocks, and tech stocks. This month there were a lot of questions about which stocks I'm watching, the coming recession, when I think the stock market might actually bottom, and of course everything going on with FTX. Your time is valuable, so let's get right into your questions. I want to start with FTX because that's on everybody's mind right now, and there's a lot to talk about. I got a bunch of good questions like why I let them sponsor videos on my channel, and why anyone should trust finance YouTubers in the future. But instead of doing some mental gymnastics to explain away my actions, or why you should trust me, let me just share the facts. Then I'll explain what I'm going to change so that this doesn't happen again, and then you can decide if you should trust me going forward. That's what I want from all the content creators that I follow, so hopefully that's what you want from me. First things first, FTX sponsored 2 videos on my channel each month from March to July of this year. This turned out to be a serious mistake on my part, and I'm very sorry for it. Here's exactly what happened. Back in February of this year, FTX approached my partner manager and offered to sponsor a lot of my content. Whether you decide to believe me or not, we do look into every single sponsor that contacts us, and we have some very strict rules on which sponsors we end up working with. This isn't some spiel about protecting my audience, although that is a really big part of it. It actually is to protect me and the channel from exactly what just happened with FTX, and this time we failed. I failed. So here's what I saw when I looked into FTX back in February before I agreed to work with them. At the time, FTX was the 3rd largest crypto exchange by volume. They had a massive ad campaign that included a Super Bowl commercial with Stephen Curry and Larry David. About 4 hours from me, the American Airlines Arena in Miami was renamed the FTX Arena. When I checked out who was funding them, I found institutions like BlackRock, Sequoia, SoftBank, Tiger Global, and even Altimeter Capital. Altimeter Capital is founded by Brad Gerstner, who's a frequent guest on one of my favorite podcasts, so him backing FTX gave me a lot of confidence. In fact, some of these firms invested hundreds of millions of dollars into FTX. And my assumption was that these sophisticated investors would do serious due diligence before investing hundreds of millions of dollars into anything. When I tried the app, everything worked as advertised, and on top of the Super Bowl ads and the arena and all the institutional investors, everyone that worked with FTX told me that they're awesome to work with, they're responsive, and so on. So that's why I decided to take their sponsorship. And I know this isn't very satisfying for you to hear, but guess what happened when I did work with them? They communicated well, they were easy to work with, and nothing really raised a red flag of any kind. When our contract ended this past June, everything seemed normal. They didn't ask to renew the deal, and crypto had just taken a serious beating, so I didn't ask to renew the deal either. I'm not trying to make excuses here. I'm just trying to share why I really thought that FTX was a solid, well-financed, well-managed business. But at the end of the day, I decided to put FTX in front of you. And now, 6 months later, it's clear that I was wrong for doing that. I could have and should have done better. So I've spent the last couple weeks trying to figure out how I can do better. And here's what I came up with. FTX was only founded in May of 2019, and they're based in the Bahamas, not the US. Compare that to a company like Coinbase, which was founded in 2012, is based in San Francisco, and is publicly traded on the NASDAQ, which means they have to comply with SEC regulations, and we can see their books. So my current plan is to only work with companies who have been around for roughly a decade. My thinking here is that I'll filter out young companies that try to take advantage of recent fads or market trends. And that's on top of all of my existing rules around sponsors, including understanding who financially backs these companies and testing any apps myself before I recommend them. This channel just turned 2 years old, so I clearly have a lot to learn as a content creator. If you have any other ideas on ways that I can vet sponsors, I'm happy to hear them in the comments below. I know that's my responsibility and not yours. I'm just letting you know that I try to learn from your feedback, even when it doesn't feel good. So the third part is whether or not you should trust me moving forward. I can't answer that for you, but hopefully I've given you some real clarity around what happened and the changes I'm making to prevent the same mistake in the future. If you have any other questions about FTX from my point of view, throw them in the comments and I'll do my best to answer them. If you decide you don't trust me after this FTX debacle, I totally understand. And if you do let me earn your trust again, I promise that I'm always doing my best to deserve it, even if my best isn't always good enough. Alright, I appreciate you letting me say my piece around FTX. If you decide to stick around, let's talk about the stock market. Julie says there are tons of people saying this is the end of the bear market, and just as many people are saying to get ready for another, more serious decline. It's difficult to wrap my head around these new valuations. What do you think about this recent market rally? Is this the end of the bear market, just a post-election Santa Claus rally, or something else? Look, I think the whole tech space is incredibly oversold right now, and the valuations for these companies aren't grounded in any sort of reality. The macro picture is the only thing that matters in the stock market right now, and that picture looks pretty bleak to me, at least in the near term. High inflation and interest rates, the oncoming recession, the war between Russia and Ukraine, the escalating conflict between China and Taiwan, winter spiking energy demand, while the world already has limited oil and gas supplies, incoming food shortages around the world, and so on. I personally think that headline inflation is going to go back up over the next few months. A big reason that headline inflation isn't higher right now is because of gas and fuel oil prices going down earlier this fall. But a big reason that those prices are down is because the US government has been subsidizing oil supplies by selling a large portion of our strategic petroleum reserve. This is where the US keeps extra oil to cover legitimate emergencies like global conflicts or bad natural disasters. Well, it turns out that we're hitting the limit of the barrels that the US can actually deploy to level out these fuel prices. Since the start of the year, the government has sold almost 200 million barrels of oil from this reserve. The total reserve had less than 700 million barrels in it back in 2020, and today our reserves have already been cut in roughly half. Releases from the reserve are currently set to stop by the end of the year. And when that happens, some estimates show gas prices going back up to around $5 per gallon. This huge price spike will cause the CPI to climb, which will cause the Fed to raise interest rates even more aggressively, which will cause the market to go even lower than we currently have priced in, especially since the latest inflation reads came in lower than expected. Remember, the market hates surprises. That's why I think this is just a post-election Santa Claus rally, and the real bottom is still ahead of us. I have another video coming up where I pretty much say this exact same thing, but with more numbers and more context. Great question. Fred says, I'd like to see you talk more about your favorite stocks. What stocks are you watching right now? Are you buying more of your favorites yet? Are you averaging down into your biggest losses, or are you selling them? So the stocks that I'm watching right now are the same ones that I cover on the channel. AMD and Nvidia, Intel and TSMC, Tesla, Unity Software, Microsoft, Amazon, and Apple. These are companies that are providing the hardware and software platforms that will dominate a wide variety of high-growth industries in the future. Self-driving cars, augmented and virtual reality, protein folding and drug discovery, the metaverse, and so on. They're also dominating important industries today, like the enterprise cloud services, cybersecurity, streaming and gaming, things that we all use every day. With that said, I'm not touching any of these stocks over the short term. I've actually been waiting for the market to correct pretty much all year because the Federal Reserve keeps surprising the market by changing their expectations around inflation and interest rates every other meeting. I think there's way more room for the stock market to correct in the very near future as interest rates keep rising higher than we expect, and I've been sharing that opinion in video after video. This is a game of patience, and I really don't think that the market has a good handle on how high interest rates could get and how long they could stay raised before the Fed brings interest rates back down to around 2%. My current best guess is that the market has another 25% or so to drop over the next couple of quarters because the federal funds rate will end up being a lot higher by the end of next year than we're currently pricing in. I also think that we're headed for a fairly deep recession in the next couple of quarters, which means less consumer spending, which ultimately means lower earnings for big tech companies. We're already starting to see some pretty weak earnings calls as companies have to compare their growth numbers to quarters where they saw insane growth during the pandemic. So I'm expecting to see lower price to earnings ratios on top of lower earnings to begin with. I know it's unsatisfying to hear me say this month after month, but I've been doing exactly what I've been saying, which is building up my cash position, keeping my emergency fund topped off because of the recession, learning more about my favorite companies, and just waiting. I'm not averaging down, but I'm also not selling any of my losses because I really believe in the long-term future of these companies. I think I've said this a couple months ago as well, but Warren Buffett has this famous quote about the stock market being a mechanism from transferring wealth from the impatient to the patient. In my opinion, times like these are exactly what he's talking about. Great question. Michelle says, okay, Alex, you were spot on with your $180 price target for Tesla last month. But since you asked me, my current price prediction for Tesla stock is around $180 a share, or about 20% lower than it is today. Let's see how mad everyone gets at that prediction and how far off I end up being. Can you do it again? Is Tesla going to trend up or down from here, and will it be because of macro factors or something company specific? So I think I said this last time too, but let me say it again here. These are the kinds of things that make people not trust finance YouTubers, since most of our price targets are way off and there's no real accountability on this platform. As we just learned with the whole FTX situation, it's really hard to make predictions about a company's inner workings when you're sitting on the outside. So I want to be super clear. This is not me telling you to go buy Tesla stock. It's just me sharing my personal price prediction. Also, this prediction has nothing to do with Tesla's sales numbers or their end of the year earnings, although I'm sure those numbers will actually be pretty great. My guesses are based purely on macro factors right now. I could see Tesla going a bit lower in the very near future, to around maybe $170 a share. I think that's about a 5 to 10% drop from here. Then, I think if the next CPI and PCE reports come in lower than expected, we could see Tesla rally back to around $220 a share, or even in the 230s over the next 1 to 3 months. That ends up being about a 33% increase from here. Let's see if I got lucky last time, or how far off I end up being this time. Alright, this was a solid list of questions, and hopefully you're tracking my answers each month and holding me accountable. I also want to say a big thank you to the hundreds of people who support the channel as patrons on Patreon and channel members right here on YouTube. Your support really means the world to me, especially with all the craziness going on in the world right now. I'm really trying to raise the bar on finance content here on YouTube, and your support helps me do exactly that. And if you want to see my research and predictions for some of the most incredible companies on the planet, check out these episodes next. Either way, thanks for watching, and until next time, this is ticker symbol YOU. My name is Alex, reminding you that the best investment you can make is in you.